All right, all right, all right. So welcome to Game Plan Sunday. Today is October 4th, and you guys can hear me loud and clear. Had a pretty interesting week last week. You guys already know what all the fuss was all about. Trump called the Rona. We had a debate, which we were actually anticipating. I was actually manning the debate here on the website, right in our chat room. If you guys can catch the little chat button that we got in here. If you look down here, once you log into the website, you can get access to the chat room. It follows you around the website. It's just not available on the home page. So if you're on the home page and you want access to the chat room, what you normally would do is just go to your dashboard or the courses or the news feed. Normally I'm catching the news feed daily. See if you guys are posting some things that's important, or normally I'm in there posting some things that's important. But if you guys can go in here, check the chat room, lots of avail in here. A lot of plays in here. We're in here daily, so make sure you guys check it out. Catching the plays, catching the moves, what's moving, what's popping. You feel me? It's all in here. So, but that's the chat room. Bring that down. When you exit out, go back into a little bubble phase. All right. So, yeah. So basically, we had a lot of economic data that was on display here this week that the markets was catching. If we go down here, I just posted some of these things. I was very busy this week. Had a pretty good weekend. How about you guys? You guys had a good weekend? Doing a little traveling with the daughter and family, and got into some good things here. So wasn't able to actually put much work in on the site as far as that go, but I did get to do a little catching up here for you guys. So right here on the website, lots of things posted here. This is a video you guys can watch if you're not familiar with what stagflation is. This is important to understand in the environment that we're going into. Cool. Ron here is actually putting together a drone list. So is Ron here tonight? Yeah, Ron is in here. So Ron's going to put together a drone list for you guys. Make sure y'all be on the lookout for that in the news feed. So if you're trying to capitalize on the drone market, that's going to be in there. It's right here on the site. So to kick off, we had the consumer confidence index numbers that were released here this week. And you guys can catch it here. Again, this is just a survey. And these surveys, this is just statistics. They're trying to figure out what's going on in the mind of the consumers and things like that. It doesn't, some of these things, they don't have as much meaning as other things. And a lot of times, some of the meanings that we gather from the numbers could be distorted also. So anyhow, this is what was posted earlier in the week. We had a consumer confidence index, said it was increased in September, right? So that's a good thing. If consumers' confidence goes up, that's a good thing, right? So after declining in August, so it went down in August, came back up in September. So it kind of made a comeback, basically. Then they got the present situation index based on consumers' assessment of current business and labor market conditions. This is what consumers feel about business and the labor markets. That also increased. So people are believing that things are getting better. The expectation index is based on consumer short-term outlook for income, business and labor market conditions. That increased from August to September. And so basically, you're saying that the consumer's mind is going into the right direction, basically. Let's skip down here. Consumer confidence increased sharply in September after back-to-back monthly declines, but remains low pre-pandemic levels, said Lynn Franco, Senior Director of Economic Indicators of the Conference Board. A more favorable, which I'm here, favorable view of current business and labor market conditions, coupled with renewed optimism about the short-term look, helped spur this month's rebound in confidence. Consumers also expressed greater optimism about their short-term financial prospects, which may help keep spending from slowing further in the months ahead. Now, this is important because if people are happy, people are confident. When you're confident, you spend more, right? And so again, this is just economics psychology, okay? So the whole idea is to keep people in euphoria mode. Therefore, you're going to spend more. So as of right now, this portion of the economic sector is actually looking good. That means that people feel like things are getting better. And I can tell that when I was just telling you guys I was out over the weekend, on a little family trip, and it was slam packed. Everywhere I went was packed. It was people that were out having a wonderful, great time. Some people with masks on, some people not with masks on. I don't think nobody actually cared. I think they're just trying to, put it on. Some places put it on, other places didn't. A lot of people didn't really care what I saw, but I saw a lot of people crowded, packed in places all over. In fact, I saw a homeless guy rolling up a joint. You feel me? Rolling up the trees, no cops around, homeless dudes blowing trees. I'm like, wow, this is interesting. So Um, anyway, people are confident. They come out, they spend. That's what the whole stimulus is supposed to be about, is to get people confident. And so as of right now, that part was looking good. So that's how we kicked the week off. And then scroll up. Let's see. We had the Consumer Confidence Index survey. Here we go. Oh, so yeah, I just did that one. Excuse me. Let's go to the next one. All right. Here we go. Here we go. We had the PMI numbers. So the PMI numbers came out. PMI registered at 55.4%, down a couple of points here. Just remember 50% is the benchmark. So anything above 50 represents, expansion. Anything under 50 represents contraction, means that the economy is slowing. This is the manufacturing section of the economy, basically production, right? And so we take a look at this. Is one of the indicators we were looking at last year when I wrote the article about the recession to come. Some of the things we were looking at, which that article is right here. So make sure you check that out, where we predicted it. As you can see, September 24, 2019. But yeah, this is one of the indicators that I actually was watching. I was manning. You guys who were here, remember I used to post these things. It was showing that the economy was slowing. There was a recession in the manufacturing sector, basically. So what I like to gather in from this here is not really just the numbers. What I like to hear is directly from the producers themselves, what they're saying about the economy. So let me click in here and show you guys. This is what the managers are saying. And again, this is just a survey basically from the managers and what they're seeing. They're on the forefront of this, right? Not, I mean, their employees are, but these are the guys that's reporting. So everything highlighted in yellow is pretty much bad. If it's highlighted in green, then it's good, actually. So guys can see that. So this guy says that he's still struggling with long lead times for components coming from China. He works in the computer and electronic production sector. So there's a supply chain shocks that's in there. Volume remains lower than 1 year ago, but has steadily improved over the past 2 periods. So volume is still low, but he's having a little progress, and he's in the chemicals products. Business is booming. This guy right here says business is booming, and the supply chain has been caught off guard. Again, another supply chain shock here, but business is booming. We are working closely with our suppliers to ensure supply and try to control costs. The resin industry, along with plastics, is driving cost increases and scarce availability. He works in the transportation and equipment sector. I say he, could be a he or she. Hopefully no one's offended, but you get the idea. It's just personifying, this here. Our business has not begun to recover. This is in the petroleum and coal products. Somebody was asking about the oil industry this past week. They should be in here because this is class right here. This is free class. You can learn. Again, business has not begun to recover. Overall, business conditions are improving, but not at the rates that we saw them decline. This is fabricated metal products. So at the rate that they decline, which is really, really fast, they are starting to see things come back, but not as fast as they drop. So kind of like a wash, if you will. Our customer order intake is increasing significantly for deliveries in the first half of 2021. Outlook is generally positive. Machinery. So things are looking good in the machinery sector. Retail sales remain strong. Food services is still down about 15% year over year. All of our factories are still struggling with manning shifts due to positive COVID-19 cases and or quarantine because employees came in contact with someone who contracted the virus. This is in the food, beverage, and tobacco products. And if they're talking in terms of food, some of the restaurants still haven't opened up. Some of the places I was when I was visiting, some places actually did not open up. But the places that were open up, I saw business booming actually. Because people want to get back out again, but there are lots of, people lost their jobs, can't get them back because some businesses haven't came back yet. All right, demand remains high, strong finish to 2020 projected with an even stronger 2021 fiscal year. So they're already forecasting into 2021. This guy's in the paper products. The prices have increased in certain categories, but no major increases of our own have been implemented yet. So sound like they may be increasing their prices on their things. They're saying prices have increased, but they basically have not passed the cost on to consumers yet. But more than likely, they will pass those costs on to consumers. So you're going to see inflation. So remember, prices going up is inflationary. We are seeing an uptick in reshoring opportunities in the third quarter across various industries and products. He's in the electrical equipment, appliances, and components sector. Oh, excuse me. This guy's in the electrical equipment, appliances, and components. The guy that's in the paper products is here. He says, we are seeing a marked increase in international demand in fourth quarter compared to second quarter and third quarter. Still not at historical levels, however, a positive outlook. man. So these guys in the paper products, you guys know I homeschool my baby. So, if anybody's homeschooling, I think a lot of people are pretty much homeschooling now more than ever. And I have to print out a lot of paperwork. Okay. So I would expect, some booms coming in here. And then I got a guy that's in commerce, e-commerce, and he was telling me, this was probably maybe a month or 2 months ago, I guess, for the school, getting ready for the school season, where they were having shortages in printers because a lot of people coming from home or are starting to work from home now, and then schooling from home, you're having to print out a lot more than otherwise you would. So then you can start to see spikes in like that. And he was saying it was a shortage of printers, basically. So you couldn't get their hands on them. They sold out. And I thought that was interesting. I mean, I already had my printer for years. So, but anyway, that's an interesting look. Raw material shortages, especially of hardwood logs, are starting to impact overall supply. Domestic market demand is fragmented but remains sound. Export demand, especially to China, is robust. All right, so exporting sounding good. Business has continued to be strong with September following August. October is also shaping up to be a good sales month as well. This is plastic and rubber products. So again, this is the PMI number. I like to capture the survey to get a feel for what's happening on the front line from the managers of the front line itself. As you guys can see, when I capture this part here, just tell you the direction. It's saying that it's growing. The rate of change also is a good capture as well. So if it's growing faster, then you don't have to worry about anything reversing. But when there's growing and then it starts to slow, then you have to start thinking about possible reversals. And, again, it's growing, but the rate of change is starting to slow. All right. So again, this is all interesting to lead up into some of the other data that we're going to go over here in a few. But I want you guys to be aware of that. Again, this is all on the website, WashingJackBoys.com. Again, we want you guys to be knowledgeable traders. I know there's a lot of trading groups out there and anybody can trade. Hell, a monkey can trade. But I want you guys to be knowledgeable. And so that's what we're doing here. We're putting out this knowledge and wisdom. So anyhow, we have the unemployment numbers here as well. So let's see, claims was 837,000. There was a decrease. So unemployment numbers went down by 36,000 from the previous week's revised level. So they actually revised last week numbers up by 3,000. And this the prior week, and then last week numbers that just came out, this report that we're looking at right here, there was a decrease of 36,000. So that actually looked pretty good. Looks like we're going into the right direction. Really wasn't much to cover here because we had the employment numbers, the ADP numbers that came out afterwards. So, but it was just basically showing, if you guys can see this chart here, it's flatlining here. Okay, you can see it's flatlining right up in here. So it's really a non-factor, right? When you start seeing big numbers, big changes, then you got to start worrying. But it's really flatlining. And in fact, there are some worrying. I do apologize. There are some worrying. The worrying is that what people want to see is this to continue to go down, right? They want to see it go back down here. And it's not, it's flatlining here. And with the Feds, throwing in so much stimulus, and that's not happening. Remember the video I was showing you earlier about the stagflation? There's worries about that type of material here as well. So that's the cautionary there. The ADP numbers came out as well. They increased by 749,000. And the ADP numbers look pretty good. And the ADP numbers lead us up to the big employment report, right? So just to say that this is positive. Everything is up. You see all the arrows here. All right. The change in U.S. non-farm private sector is 749,000, right? So that was actually good. Then here comes on Friday, we had the non-farm payroll employment numbers that came out. And so this is the biggie here. They increased by 661,000. Always know that they always hit you with the good numbers first. In September, the unemployment rate fell to 7.9%. So then psychologically, people think, oh, that's the good thing. We got jobs that increased and the rate of unemployment fell. But you got to dive into this a little more. OK, and I'm going to show you guys how to do that. Let's see. Let's read a little more here. What did they put? OK. The rapid jobs recovery in May and June has definitely ended and may even have started to move into reverse. The net result is that as of mid-September, there were still 7% fewer Americans with a job than in February. That translates to about 11.7 million fewer people working than before the pandemic. So that's almost 12 million people that's no longer working, more than before the pandemic numbers. Of those, about 3.8 million say they are on temporary layoff. So you got about 4 million people that saying they're on temporary layoff. and they expect to be recalled. So that means you got people that expect that they're going to get back to work. But even if they were all to go back to work tomorrow, there would still be almost 7.4 million more jobless Americans than in February. So even if you took this as a mathematical equation and we turned the variables up to 100% of people going back to work, which we know that's not happening, they're saying that there's still going to be almost 8 million more people that's going to be unemployed. Excluding workers on temporary layoffs, the effective unemployment rate is 8%, which was almost as bad as in April. So this is very concerning. I'm going to dive into the report here so you guys can see this is where things get interesting. So skip down to the parts that I have highlighted here, right? So in September, the number of permanent job losers increased by 345,000 to 3.8 million. This measure has risen by 2.5 million since February. The number of unemployed job leavers rose by 212,000 to 801,000 in September. Okay. And in September, let's see. Actually, let's go back. Let's see. It's a lot. I know you guys don't want to read through this, but I'm going to show you something that's important. All right. Race decline in September. Okay, so they break it down into race categories and stuff like that, right? Okay, down from the September. Let's continue to go. All right. The labor force participation rate decreased by 0.3 percentage, 2 percentage points lower than in February. So this is people that's actually participating, people that's actually looking for work. And they're saying that people that's looking for work, people are giving up, basically looking for work. We're starting to see an uptick in people giving up looking for work. All right. And then we get here down to the number of involuntary part-time workers is 2 million higher than in February. Involuntary means that they would have preferred, and it explains it to you here. They prefer full-time employment, but they were working part-time because their hours have been reduced or they are unable to find full-time jobs. So you have, 2 million more than in February that's actually working in that kind of status. So they're doing part-time work. They wish they can work full-time, but the opportunities are not available for them. So they're having to, and they're pretty much forced to try to find multiple part-time jobs, right? So which increases the job numbers. You got one person that takes up 1 or 2 part-time jobs that adds as, 2 jobs in the system, but really it's one person that's given 2 jobs. So that's also distorting the numbers when we look at the numbers. The number of persons not in the labor force who currently want a job at 7.2 million changed little in September. These individuals was not counted as unemployed because they were not actively looking for work during the last 4 weeks or were unavailable to take a job. Understand, if you're no longer actively looking for work, then you're not even considered in the numbers. They're saying it's like 7.2 million people. Okay. You get into the number of discouraged workers, things are not looking bad. And remember, the feds, they don't like having issues here because this is the ingredients for revolutions. People overthrow the government, so they're trying everything they can to try to get these jobs popping. And I don't know why I didn't have it highlighted in here. I thought I had it highlighted in here. But the problem with this unemployment numbers here, okay, it wasn't the temporary jobs. It was actually the permanent jobs. Okay, so there's an uptick in permanent jobs actually. Let's see. Here we go. I got a little snippet right here. You guys can see that. All right, here we go. You can see the uptick in these permanent job layoffs. It means that, the jobs that were lost is never coming back. In this report, that was really worrisome for the markets. So the markets is looking at it and, again, you had Trump that came back with the Rona. And then you had this report that came back that was saying that these jobs, they're never coming back. It was more. It was an uptick. It was like over 300 million, I want to say. It was a lot. Here we go. All right. So then I also captured this right here from The Economist. The V-shaped recovery chatter is over. And that's what was gathered from this report. This is what the economists are saying after seeing that report. So they said, this guy here says the lack of additional fiscal support is a real concern. The low-hanging fruit has been picked and the job market recovery will slow further going forward. He said a surge in coronavirus cases in the late 2020 could lead to further business closures and inability to pass additional fiscal stimulus, including aid to households, small and mid-sized businesses, and state and local governments, is another downside risk. Mark Zandi, who's a chief economist of Moody's Analytics, said the report is just proof positive that this is no V-shaped recovery. It's going to be a slog. The economy risks stalling out without any additional fiscal support. And then you guys can take a look at this chart here, climbing out. These are the jobs that's being created. Again, we're talking about them creating these jobs. This is the bounce. This is where we were before. We lost all those jobs. So all the jobs created here is just trying to get back square to one, but we have not squared back to one. This is square to one. We haven't squared back to one. We're coming back here, and you see the line is starting to curve. Let me just show you here. The line is curving, so it's looking like it's starting to plateau. So this is all interesting, boiling up into the weeks coming up ahead, although we do have the election and everything coming up, which is going to bring a lot of volatility. But the issue is that there's no stimulus yet, okay? And they are dependent, the markets are dependent on a stimulus, and it doesn't look like there's going to be a stimulus. And it's for political reasons, right? The Democrats, they definitely want to hurt Trump's chances of being reelected. And so they're going to make some demands, and, you know, they're going to try to, you know, force the Republicans to give into some demands that they don't want. The Republicans, they are not going to do that. So you got this gridlock that's happening. And it's basically looking like there's no progress. And then, you know, they may try to do something after the election. In fact, I think I heard Trump say it. And was it the debate? I can't remember. He was saying that they think it's going to hurt him, but he didn't think it mattered. But anyway, it's all been, you know, politicized. But meantime, what they're saying is that the job market itself is getting crushed. That means that the people are going to actually suffer. So people looking for jobs, you know, like he said, the low hanging fruit has been picked, and the job market recovery will slow further going forward. So it's harder for people to get into jobs because it's a lot more competition that's out there for whatever is available. It's definitely put a lot of pressure on the markets. So that's what we had to look at on the economic look here. That's everything that was up on the menu this past week. Again, take a look at the calendar here. You guys see what's coming up this following week. It's not much. We got the ISM services numbers, unemployment numbers more. And that's pretty much it. So with that being said, let's go and bring us here to the markets. And let's take a look here. All right. So actually what I want to do is let me show you guys the, let's go to the TLT. All right. So I thought this was interesting, just taking a look here at TLT, which is the bonds market. Okay. Bonds are in a very, very interesting situation. But the chart is actually struggling up here and looking like it's about to kill over, which again, they're really manipulating this massively. Okay. Let me switch my colors here. All right. So we got, you know, the trend is going downward, right? Momentum is going downward. Okay. You got the short trigger right here, and it's right there breaking the floor. Okay. It's breaking the floor, but it's, you know, we got to see if it's going to break all the way down. It's still kind of magnetically glued there, but we have to see if this is going to break. For you guys who took the time in the markets class and you know how this worked, the time in the markets class come included, you know, with the Wall Street Jack Boys trading class for free. Teach you guys about these market things. But as you guys understand that when price goes down, interest rates go up. If interest rates are up, price goes down. It's the reversal process here. So I thought that was interesting, you know, going to this couple of weeks coming up to see what's happening with bonds. Normally bonds is a safe haven, but this economy that we have now is a very, very treacherous one. We got the election year. We got a lot of Fed central planning that is distorting the economies massively, right? And so just like we was just talking about here with the Feds pumping in money into the markets, causing distortions. I actually posted on the Facebook page, even about the real estate market. You know, last week we talked about it. My mom was just talking about, hey, you know, people buying houses. I'm not seeing any issues. But you go out in places like Cali, you go out in places like New York, having an exodus, you know, massive amounts of homes, you know, can't be filled, can't even, you know, people are not buying them. They're moving out of those places. and they're moving down south. You know, they're going to Texas, right? They're going to Florida. They've been coming here, right? So it's causing distortions in the economy, right? You're seeing big numbers like, oh, it's booming over here, but then you have an exodus on its way. These are distortions that's caused by the Fed, right? And the lockdown itself. So all that's happening, which really clouds the judgment. But you got to understand, when you study history, you understand how this all plays out. But check this out with the bonds right here. Well, let's go pull up the yields. Again, this is on the website. All you got to do is type in Treasury yields in the search bar on the website, and you guys can get access to this. So anyway, just taking a look at the bonds here. As you guys know, the short-term rates is controlled by the Feds. They do their manipulation there, which is the gray line. And you can see how smooth it is, right? Look how smooth that data is, right? It's smooth straight across pretty much. That's the Fed's manipulating. This is the free market here. And the blue line, right? And take a look when we had this spike back here, right? This spike, when that went up, what was the markets doing? Okay. That was interesting. Okay. Let me show you guys what the markets is doing. What was the markets doing? Let's just pull up the ES. All right, so that was back here in this zone right here that dropped down right here. That was the zone. This was in March, okay? That spike in those interest rates, we saw the markets go down here. Now, if we have another spike in here, then we can see the markets make that same kind of move. All right, so let me pull it back up and show you. And so this is where we are, all right? They don't want the interest rates to go up, but look at it. Look at that trend. It's going up, which is interesting. The Fed's rate, you know, they're keeping it suppressed down. They're trying to keep it down, all right? But look how it's going up. And what'll be interesting is if we see a spike in those rates. Give me a second here. There we go. All right. Screen kind of froze there. You guys can still hear me? All right. So yeah, so if we get a spike in the bonds, then that will be really, really interesting. Okay. Because remember, if the interest rates go up, prices go down. All right. So let's drop that down. And, you know, that will fit the narrative of the bonds going down, right? Right. So again, taking a look back here, back to the hypothesis here, is if we get a drop in the bonds, that will fit that narrative, right? If we get that, you know, increase in the rates, and this will go down. All right. But remember, the Feds are just trying to keep this thing suppressed. But remember, this gets out of line. The Feds, you know, they go in there. You see, we get these crazy spikes in there. So lots of manipulation in there. All right. And let's actually go to the real estate. Let's see, real estate market. So because of the distortions in the market due to COVID and due to the Feds, you know, keeping those rates artificially suppressed, you're seeing, you know, surges in housing and real estate. And so real estate is starting to, you know, you see how this is actually starting to look good right here. Now, again, I believe this is all short term just because of the credit ratings of America itself and the citizens. Is, you know, it's crazy. It's so manipulated, but it's really terrible. The debt levels are out of this world. They're higher than back in 2008, the housing crisis. But they're trying to do everything they can to keep this thing going. So anyway, I think short term, we may see this play out up into about that zone. We got the squeeze that's in here. We see momentum shifting. We got the trends that's going up. All the stars are in alignment, right? We got the floor that's underneath us. This is actually the risk here. But we got a buy trigger that's right up in here. And so this right here is a potential move that you guys can take a look at. but I do think that's an interesting setup. It's pretty much clear as day. Okay. Also, in the reports that we had this week, on the site, let me see, which one was it? If you guys can go to the here you go, the employment situation. These numbers here, this report was really detailed. And again, we have the links to these places where you guys can access the full reports built into the calendar over here. But those jobs that were created, okay, a lot of the jobs that were created, they were not production private companies jobs. They were government jobs. Okay, understand that the government doesn't produce anything in the economy. That's not like a product. That's why they split it. When you're looking at the numbers, they're talking about the non-farm, payroll, and they split it and they let you know what's delivered from the private economy and then the government. So there was a lot of jobs that left that was from the census. Okay, you remember they hired a whole bunch of people the beginning of this year to do the census. A lot of those people have been those contracts or those jobs have been ended, but the government has been hiring more local jobs and things like that. Now, in order for the government to hire all these jobs, you got to understand the government doesn't make money. Where does the government get the money from? Taxpayer dollars. That means they got to increase taxes. They have to do something with taxes to get the funds to fund all of this. So it's not productive, right? Or they're trying to get the feds to buy up these bonds. This is debt to fund these operations. So those are some interesting things. And so you take a look at companies like this sector here, the XARs, the aerospace defense. These companies, they all get this government contractors, these space guys, the Boeings, and you got a lot of hype built around these companies here, and they're all competing to get government contracts. Nobody's privately putting their own money up to fund this stuff, right? This is taxpayer dollars that's coming in and funding it. You got companies like Virgin Galactic that's trying to get in on that. Of course, you got Elon Musk is getting them from SpaceX, right? So a lot of these guys are competing, trying to get these government contracts. Okay. Now, whether you believe in what they're going to do or not, it doesn't really matter because they're going to continue to get government money to fund these things. Okay. In fact, I just saw something about NASA, something about a $34 million space toilet that they're trying to put out there. $34 million on a toilet for some people to poop and piss out in space. How many homeless people can you feed with $34 million? Right? Why are we pissing that off in space? Right. And so most people actually don't even understand the space thing itself. I'll be quick on it. But the International Space Station itself is in what's called lower Earth orbit. Okay. There are altitudes to space. They actually can't get outer space. This is fact. There's nobody that can go outer space. They're in what's called lower Earth orbit. And that's where the ISS is at. Anything Elon Musk and them shooting is all in lower Earth orbit. That's not outer space. Nobody can go outer space. For whatever reason there may be, just nobody can go outer space. Obama cut the NASA program because of that. It was a waste of money. And so what Trump is trying to get it back. And so he's actually really bullheaded on providing these, space companies this money. This creates jobs. Okay. A lot of the people that's in the space, science, technology, engineering, mathematics, they get these jobs, and they're good paying, high paying jobs. They're not from production. They're from taxpayer dollars. You got the Space Force now. He's also created the Space Force. And it's interesting that anybody even thought about, like, why was there even a moon? What was the moon landings? Why were there space wars back, in Kennedy days, right? What was that all about, right? Did it really benefit society? All the money that's been going into NASA, they get, I think about over $30 billion a year. And it's 2020. It's been half a century and they cannot go to the moon. Okay. They say they went back in 1969 and the technology that they had was like 4 megabyte computers. Okay. Computer take up your whole living room, 4 megabytes. My watch got like 12 gigs in it. Okay. The technology was stupid. Your Game Boy had more power and technology than that. Right. So anyway, there's lots of substantial evidence to show that was fake. Okay. So I know there's a lot of people that's really optimistic on companies like Space, Virgin Galactic, right? You got Sir Richard Branson, who was just broke not too long ago. These guys depend on the government to give them this money. This is how they make their money, is getting their wealth from the government spending, right? I think this guy's putting up his island because he ain't had no money. This was a report back in April or March. But anyway, you got this company the same way Elon Musk. They fighting to get these contracts. They're all fighting to get these government contracts, which are billions of dollars to do this, keeps them afloat. And whether or not they achieve what they say they can achieve, no, they can't. You cannot go to the moon. They have not been to the moon. They claim that they have, but there's no evidence that actually substantiate that. All the evidence, they say they destroyed it way back then and they can't rebuild it. We got super computers and artificial intelligence nowadays, and they still can't do it. Why? I don't want to take y'all down that rabbit hole, but do your own research on it. But that's why I'm actually pessimistic on companies like this, because I know that he's doing this whole program to send people out in space, where you can pay millions of dollars for a ticket to see Earth from space. Okay, so that's why I told you earlier about lower Earth orbit. Nobody can go out of space. So people in their brain think it's Star Wars, Star Trek. I can go out of space. I can see Earth. You can't do that. They'll take you in high altitudes, but he's not taking you up where rockets can go, where high altitude balloons like the weather balloons can go. You're not going that high up. Anyway, but I just think it's a waste. It's a waste of taxpayer dollars, to be honest. But you do have people that's bullish on these type of stocks. The stock itself is trading above its moving average, so therefore you can get some money and stuff like this. But I think that these companies that's getting government money will still maintain as the government tries to create jobs. They do government spending to create jobs, to try to get jobs created in the system. Like back in the day when the Federal Reserve was created, again, when they figured out this whole hypothesis about stopping revolutions by keeping people work, they actually created the jobs to build the Federal Reserve buildings, right? And that created jobs, temporarily, of course, but it created jobs. And so that's what they're trying to figure out how to create jobs. And I think a lot of those jobs are created, like we just saw, are in the government space, not in the private sector. And the private sector is not producing anything. You have a botched economy. All right. So that's basically what I want to get to on that. So just keep that in mind. Right. But there's still money to be made here in the market. So don't, again, don't forget, get you some short-term money for now. But these are not long-term plays. Other than that, I know I'm a little long on time. So I'll take a look at a couple of situations from you guys. This is interesting here. The consumer discretionary sector is actually in the squeeze. It is extended. And so I will be watching this. Amazon leads this one here. Okay. This is the lead. Amazon is the leader here. Let me see. Definitely want to watch this one here. It had a little turnover right at the 618, but we had a buy trigger in there as well. This could be a little short-term shakeout. I'm not too sure. But I think we can get back up to like the 786, about 150 on here at least in this sector. Where would that come from? We've seen a lot of smaller stocks that's popping up, here and there. But I do like this sector here with the squeeze and the uptrend. And so look like we can probably capture some movements here. But just understand the environment is treacherous going into the election. So you don't want to be holding real long term in this here because of the election is going to be really, really volatile. All right. That's it kind of makes sense. Why wouldn't the Fed stimulate the markets and pay out yield on bonds simultaneously? It's either got to be one way or the other. Right. Yeah. Well, it's always consequences to all of that. Jack in the box. All right. Jack in the box. Let's just take a look here. So the stock itself moves pretty steady in a nice range here. It's always got this like nice tight range. If you notice, it never really moves too far away from the non-moving average. Never deviates too far from this moving average. So I wouldn't really expect it to move too much. This was a big move here, though. This move here on Friday was a big move. Last time we had a big move like that, let's see, that was a big move like that, but this normally don't have these kind of big moves, though. Which that's interesting, right? So just swing from high to low, it bounced up to the 618. It does have buy trigger signaling. So the key here is, okay, can we clear this 618? Okay, or come Monday, Tuesday, this thing starts to roll over. I think that's going to be interesting to watch. But all signs look like they're pointing to the north here. So you got the bounce here. Bingo. Targets right at 91. All right. What else we got? MLHR. Bingo. Got a nice little handle here. So what I want to do is take this from that swing to this one here. All right, so if we could swip this over. All right. Jeez Louise. Guess it wants to give me the pencil. All right, so it came up, it bounced right here at the floor, and then we see it come back up. Got a $38 target on that. It is overextended though, so just keep that in mind. But as you guys see before, those extensions, they can hang out in those extensions parts, for quite a while. So that'll be something to look out for. But again, it's bullish. It's above its averages, so it is bullish. CRM, Salesforce. Okay, you got a flag here as well. All right, these are the last targets. All right, so just taking a look at the chart here, nothing else on it. We got a buy trigger in here. We have the 9-moving average and the 20-moving average is crossing. I need to see if price is going to maintain above that. I don't know if you guys can see that or not, but let me just push it in some more. All right, so that's what we're looking at. Price right here sitting on a 9. Can we stay above that or do we break under it? We'll find out on Monday, which is tomorrow. If it breaks under, set up, call it off. If it stays above, then you have a setup that looks more like a inverse head and shoulders type of deal here, right? You got like a little shoulder here, head here, and a left shoulder there. So that'll be, what you would look for in this one here. I would like to play this on the bullish sector here, Salesforce. I'm not too sure. We'll have to see. But the setup, just looking at the technicals, it could be bullish, but again, it's got to stay above the 9-moving average. If it breaks, call the play off. And again, we should get some kind of confirmation on that tomorrow. All right. And yeah, Salesforce is a good one though. I like the fact that they bought Tableau. You guys know, in fact, this is Tableau right here. I don't know if you guys, what I build this, the yield curve in. Again, I didn't see anybody who else had one, so I actually built one. This is what it looks like on a daily chart here. But this is Tableau. And Salesforce actually bought this company, which is a very, very smart move. Very, very smart move. This company right here. Tableau, for you who don't know, Tableau is like Excel on steroids. And a lot of things is kind of drag and drop, makes things really easy, making charts and stuff like that. And it makes the data interactive for you guys. So you guys can go in when you're on the website and you look at the yield curve, you can take a look at, if you're doing research, you take a look at the data from whatever stuff you want to. Like you can go back in time, stuff like this. I can go all the way back, or I can, come up here where we are today. Same thing here. I got this on the last 12 months, but you can go in and, look at the data and stuff. This is one of the main indicators how we were able to predict the recession to come, because it is the most accurate indicator there is. It's the yield curve inversion, which we got that inversion right here. As you guys can see, this is from the last 12 months. All right. Cool. So again, I do like Salesforce overall. It's a little expensive though, but I still like it. Let's see what you got on Win. Think Win is making a comeback? Yeah, Win. I still don't like Win. I see people that's going out and everything. I'm not too sure if people are actually booking hotels and things like that. Maybe they are. Maybe they are. But let me just remove some of this here. The chart itself is, again, it's trading on this moving average. As you can clearly see, it's in a bearish trend, right? Bear trend. So, all right, down here, you can see the momentum trying to shift upwards. But you remember, even if you come up, you got that resistance level to take a look at. So I don't know if you're looking for a counter trend trade. That could be the case. Anytime we get the bright red candlesticks, as you see, is normally the price reverses when they get the bright red candlesticks here. So we got a bright red one, right? And so that bright red one may give us a reversal. But again, looking at the reversal into the 100 moving average as a resistance zone. So you can get a couple of points out of it. It'll be a short-term play. All right. What else you got? Okay. Same thing here. You know how I feel about those bright red candles. Bright red, pop, right? Get a bright red, move up, bright red, move up. And here, got a bright red. So this is, to me, it signifies a reversal, possible reversal here. But again, this would be another short-term pop up if we can come back up to the 786. This zone here, clear resistance. And so, if you get a reversal, come up here. This is profit taking zone right here. All right, 786 profit taking zone. SQ. Okay. Stock is bullish square. And this is one of those coronavirus beneficial stocks, with digital payments and everything here. Just taking a look, that 50 served as a key floor, the 50 moving average. You can see it clear as day. Nice bounces in here. And as it came down, it started to reverse up. We had a buy trigger right here. It's coming up. And the target, remember, this is in an overbought territory. The target should be up here to about the 180, right? That's where it's trying to go, to the 180. But it just hit its high on Friday. Price could be coming down. I think that we may be a little too late to get into this move. Just taking a look here. If we pull this up, we're already in the overbought territory. I'm a little more cautious once we get into the overbought territory, although you can get some free play in the overbought territory, but just understand that that's where we are. So I wouldn't expect a big move. It could be a slow grinder up into here if we get to that zone. I think that's a possibility, but it'd probably be, you may want to throw some credit spreads on there. And who else we got? What is a GLDLF? Okay, gold mining. Huh? Haven't heard of this one. It's a gold stock. It's a penny stock at that. Again, penny stocks are a little more volatile. And if I'm going to play this off of the notion of it moving with the gold sector itself, then we need to take a look at the gold sector. And I would be a little cautious on this one here. These companies are very volatile. So let me just take a look at the gold sector first. All right, so gold has been coming down at at buy points here. So I think that we're in some good buy zones here, but I'm not too sure that gold is finished and that is ready to reverse. When I take a look at things like the fast stochastics coming up real fast like this, but the heavy one hasn't moved yet. By the time it starts to turn around, we normally get another downturn in between time with the momentum. So I'm not too sure if it's finished. If we're just taking a look at it here, right? It's still, I think, it's still got some squeeze motion in there. Again, we got our floor right here, but there's a possible chance that we can reverse and come back down a little more. Now, if we actually can break out above this 20 moving average, okay? So again, price is under the 50 moving average, also under the 20 moving average. It is above the 9, but we need to get a break out above, okay? So it's got to break this trend for me to actually be looking to add more to that position, okay? Now, what could possibly happen here, again, just looking at the 20 moving average, it's right up against that. If it gets rejected here, then we can come back down to, the 100 moving average, possibly form a double bottom, and then come up to make, the gain higher. It's a little tricky right now. it should be much higher, with the risk coming into the markets with crazy stuff like Trump getting Rona and stuff like that. Normally people get scared, start buying into gold. We actually didn't see that happening, which is a little weird. But maybe they, think that Trump is going to beat the Rona. Trump is actually painting it like he's going to beat it. So the markets are they were down on Friday because Trump caught the Rona. Markets are up right now. Trump dropped a video earlier today saying, like, hey, he's good. He's still working. He's trying to get back on the campaign trail pretty soon. And basically, we see the markets are pretty happy with that news. But you can never know, midweek, you catch a fever, something crazy, and it's going to sell off. So it's just a little tricky to play it right now. But we also see the dollar is finding strength, which is counterproductive to gold itself. So that's interesting. So again, to play gold, we have to actually understand how the dollar is going to be moving. When the dollar is strong, gold is, it's got some more room to come down. So I'm not seeing that right now is, the best time. And I think that we probably get a little more pain in gold until we start to solidify around this 100 moving average. That's my hypothesis. Again, it could just take off and go north right then. I'm not too sure. Again, I still like these prices. These prices are still pretty good. Anything under 1900, I think is good for the long term. Remember, the targets that we had on gold from the big banks was at the Bank of America. Let me see, or Goldman Sachs. They still got the $3,000 target here. Okay, so long term, we got a $3,000 target on gold. Okay, we're just trying to time it at the best position in here. Even looking at this weekly chart, it's still interesting as well, right? We can see the 20 moving averages, hovering right here could be a good floor. But if we take a look at the momentum, right, the momentum still coming down, right? And normally we get that momentum shift come all the way down till it flattens out before we get that reversal. So because that momentum is still coming down here, we normally don't see a shift in the momentum that come up, midterm like that, which it could, but we normally don't. So that's why my hypothesis is where it's at with that. All right. What else we got? Sector, John. Okay. Apple. Let's see. Apple. This will be the last one. Apple, again, I think we talked about this one as well. It was interesting because it looked like it would want to do an inverse head and shoulder. But we take a look at the momentum. It's looking like it's starting to come back down. So Apple is still in another tricky situation for me. Very similar to gold. If you take a look at it, price is underneath the 9 moving average right now, right? It had a pop up above, and then it's falling right back down. So Apple is chopping people up right now. It's chopping people up. Ideally, what you want to see, and I think we talked about this last game plan Sunday, was if this thing can do an inverse head and shoulders. But you're starting to see a trigger down to the downside. We see the stochastics moving downward. We're in a squeeze, so I think we get some consolidation, but the trend stops out. So yeah, this one here, you definitely don't want to put no calls on it. I would, if anything, I'll do a spread on it just because it can go either way. He says a weekly squeeze on it. Let's take a look. No, I don't see weekly squeeze here. Squeeze on the weekly. Not seeing the weekly squeeze here, but yeah, this is the daily chart. Take a look at the intraday. Yeah, the intraday is showing some selling pressure. So yeah, let's see how Apple play. I don't see any setups in Apple in particular. Normally, if it takes that long for me to think about it, there's no setup. So, all right, cool. Oh, you said you watching the utilities. Okay, so I saw the utilities. I think the utilities maybe again counter to the bonds. Okay, safety. I think utilities is a good place to watch because the bonds is normally safety, but if they don't play the bonds, then they may play utilities for safety. And utilities is in an interesting position. It's in a squeeze. It's up against this 200 moving average, which is key resistance here. But we got a buy trigger right up in here. And for me, I would like to see it clear before we play it to the long side. And I think, bonds really don't move that much. We could possibly get up to the 786 if we can clear this 200 moving average. Again, we got the squeeze. I think this is the one that Ron was talking about, the squeeze. Trend is going up. Stochastic is moving up. But this would be a more safety play. Utilities is like a proxy for bonds. Okay. And with the bonds looking the way they are, I don't think anybody, there's no yield to get in on bonds right now. So investors are probably better off playing utilities versus the bonds themselves. All right. Cool. So with that being said, I want to thank you guys for joining us tonight. Make sure you guys log into the website daily, check out what's going on, hop in the chat room, say hello to your compadres. You feel me? Also, make sure that, support the website, invite your friends over to the site to join. I know I've been busy, so I haven't been able to plug as much as I wanted to in here, but just understand that you can invite your friends, your people right from the website. When you log in, go to your profile. I'll show you this real quick and we'll bring it to a close. But all you got to do is go to your profile and then you just drop in their email and you can invite them to the website. It's right here. Email invites. Okay. All you got to do is just go there and drop in their email right there. And the website will populate an email to send to them. And if they're interested, then they'll actually join. So this is the send invites tool right here on the website. So make sure you guys utilize that. Help us grow the Wall Street Jack boys. Okay. I'm only one man. I'm one man and I'm trying to be human at the same time. So go Lakers. Okay. I feel you, John. Right. We got to go to a Lakers game out there, man. All right, cool. All right. So you guys enjoy the rest of your weekend. We'll catch up in the markets this week. Peace.